Hey everybody, it's March 11th, 9:53 p.m. and I want to talk about the leveraged ETF trades that came in on Friday that were so unusual, so large, just off the charts large. I wanted to do a more in-depth uh, analysis here after having posted about this several times. So let's get started. Here we have the disproportionately large trade screen, and I have it filtered to all trades that rank in the top 100 and that are bull leverage. And that leaves us with several very large trades here. There were many more behind this that weren't quite as large as this, but this ought to make the point. So going in chronological order, what we saw towards the end of the session was QLD come in 5 times between 2:57 Eastern and 3:42 Eastern. Each of these trades was in the top 31. So we have 17, 28, 29, 30, and 31. Each of them is very large. Each of them is 25 times larger than average or more. One of these would have been a strong signal. 5 is a very, very strong signal. And when we look at the visuals, here's what we see. As the day was ending, they just started coming in one after another. It was something. And they all came in towards the low. They didn't all come in right at the low, but they did come in here on this final descent. And then we got a little bit of a bounce here in the last few minutes of the session and then into the after hours. If we look at this on a larger time frame, these trades were all larger than anything since this trade back in early February. And you can see they all arrived here at a meaningful low, potentially meaningful low anyway. Got a lot of selling in QQQ over the last several weeks, and perhaps culminated here with 5 top 100 ranked trades in a leveraged ETF, which is a lot. If we go back to the trade screen, we see the next one that came in right at the close was SPXL, number 43, and then a little bit later, SPXL, number 7. So if we look at that chart, excuse me, we see these two here coming in right at the close. One was 40 times larger than average. One was 25 times larger than average. It's unusual to see them come with the QLD and the other stuff that I'll get to. So this is just more evidence to suggest something important is happening. If we look at this ticker over the last, I don't know, since the beginning of the year or so, you can see the pattern that whenever these very large SPXL trades show up, and these are all ranked in the top 100, we tend to beat an important inflection point, an important pivot of some sort, a high or a low. So we got one here, which capped this little rally. We got a sell. We got one up here, which capped this rally. We got a little bit of a sell. Then we got a couple more here, which either capped this little brief rally or were perhaps short positions. Then we got a lot of selling. This here, to me, looks like a short cover, although it could be a buy as well. But short cover would be more consistent. We get another one here that caps this rally. And now we have one here at a low. It's much more common to see SPXL and UPRO print near highs. It's easier to detect selling. These ETFs are often bought in smaller chunks and then sold all at once towards the end of a run, a rally. So here and here and here. And we can look back over time and see this phenomenon repeat many times over. But this stands out to me, and this is at a level. We have a level down here where the previous rally began. And we have size, and we have size across many of these leveraged ETFs. Next up, we have UPRO. Oh, excuse me, we have TECL, which is the 3X tech stocks ETF, 3X leveraged ETF. This thing is not nearly as liquid or as popular, but it's, contains all the same stuff, Apple and Microsoft and Amazon and so on. and it came along too. It doesn't print as often, and it's just further evidence to suggest something's up. Usually you see these at highs and lows, just like everything else. We got a couple here at this high. We had a nice run through January, and then 2 prints. Each of these was ranked. This is 61, and this is 56. The one that came in on Friday was 54, right here at a low. And look at this, it's a level. There was a bounce here, support. And this was resistance at one point in the past too. So this level is meaningful. And then you can see the volume profile here. There's a lot more volume up here than down here. So this, to me, suggests that they are buying, just as the others do. Next up, we have UPRO, which is another 3X ETF. It's just like SPXL, and the chart looks just like SPXL. We have trades, these guys, SPXL and UPRO, tend to come in tandem. You can look at the 2 charts, and they look very, very similar. The trades come in at the same times, usually in the same days. So whoever's doing this is doing it in both, or it's just a cosmic coincidence. But anyway, UPRO came in here at the end of a rally, here at the end of a rally, here at the top, here probably covering, here at the end of a rally, and now again at a low, which suggests buying. So we have this level, and again, this was a level that was meaningful in the past, just like SPXL. So that all leads into the one that really, really got my attention, and that is this SSO. SSO is a 2X, not a 3X, but the same point remains. This thing was so large. I'd never seen one this large before. It was so large, it had nothing since 2014 has been as large as this. It was the 3rd largest in its history, and it was 219 times larger than average. This, for a leveraged ETF, is off the charts. This is enormous, and when we look at the chart, we can see it came right here at the low, and then we got somewhat of a little bounce here in the after hours, which is interesting, and I'll come back and talk about this because I was watching the order book of the futures at the time. And SSO here, when you zoom out and look back over the last year, or since the beginning of 2022, these are the 3 largest. Right here at a low, we got a little pop. It did fail and continue lower, though, as we know now, but this marked some kind of a low. We got one at this same level back in December. So December 16th, 44.83. Today, or Friday, I should say, it's 44.50. So very, very similar prices. And last time this was a support level, and we got a rally for, I don't know, month and a half. I can't even remember. Maybe longer. And then this thing shows up at a support level with such enormous size, and it comes with SPXL and UPRO and QLD and TECL, and it is super suspicious. This, I can't emphasize enough how important this is. All of these together suggest a large magnitude move. If there's one thing to take away from this video, it is that a large magnitude move is expected. Now, the data is consistent with bullish outcomes. That doesn't mean it has to be bullish. That's what I think it is. And that's what we've seen in the past. But given the backdrop, there's always a chance that this is not. So be on the lookout for that. Still, though, we'll see. I think I have to rely on the data and not listen to the narrative and all the talk of the banking crisis and so on, which I'm not ignoring. I'm not saying isn't relevant, but the data is telling me a different story. So it suggests to me that there will be some kind of resolution to this crisis, or that we'll punt it somehow, or find a way to navigate through it. Whatever it is, I think that this is pointing to a rally next week. If we go further along, we can see more evidence to suggest the same outcome. Here are the bearish ETFs. So we saw bullish ones being traded at lows, and now we're also seeing bearish ones being traded at highs, which is consistent with closing bearish positions. So we had TZA come in first, we had SQQQ come after that, or excuse me, we had dog come first during the day, which is a bear Dow ETF. Then we had SQQQ, and then we had TZA. I'm not going to show dog. That's not liquid enough, but I wanted to just put it on the screen here. But SQQQ, which is very liquid, we can see came right here at the high of the day, and price started to decline after, which, it's after hours, and I don't put a whole lot of stock in this, but it does suggest that this was a sell. But what really stands out to me is that SQQQ over the last, well, this chart shows just since January, but the pattern is consistent in all across time. These large trades appear at pivots, at highs and lows. We had a couple up here towards the highs in SQQQ in January, which were near the lows in QQQ. And then we have this one here, which shows up at the lows for SQQQ, which would be consistent, or would be consistent with the highs in QQQ in early February. And now we have one here appearing at a local high, which just happens to be a level which we saw recently, I think a week or so ago. So this level is important. We have a move up in the inverse ETF. We have a large trade at the end of the move. It does suggest that this is a sell. And if this is a sell, and those other ones in the bull ETFs are buys, we should expect a reversal, or at least in the past, when we've seen this pattern, a reversal is the most common outcome. No guarantees, but that's typically what we see. If we flip over to TZA, which is the inverse 3X for IWM, same thing. We had IWM really tank this week, and TZA went straight up as a result. It went from 26 to 34 in 5 sessions, excuse me. So seeing a large trade here would suggest selling, because institutions are not going to buy at the top. And so if they're selling the inverse ETF, that means they are closing a long position in a short ETF, which means a reversal would be in order or expected. So we see it across all 3 indexes, 4 if you include the Dow. If we look at SPY now, these are the underlying. I've highlighted only the trades from Friday that came in between 385 and 386. And you can see there we got this little pop again, which this came towards, after hours, which is unusual for a Friday. It's very unusual. I don't usually pay close attention to after hours action in SPY because there's just not enough liquidity. But I was watching the futures, and this sharp move up is odd, because when Fridays roll around, they just shut it down, typically. But they were pushing price up, and as I watched the order book, I was watching them put a floor in on the futures and hold price higher, and then push it forward and push it up. And this went on until I think right at 5 o'clock. And then at 5 o'clock, this is when this little spike ended, and we got a little drifting. And but anyway, this 385, 386 level has 2.9 billion plus 2.4 billion. So this is 5.3 billion roughly. That's a lot for a day in which we have not yet seen the signature prints. So just to remind everybody, the signature prints are special. They come after hours, and they're reported the next day. They are traded on foreign exchanges, and those are typically where the bulk of the trading comes in on the indexes. That's how these levels are set. That's where most of the inventory is traded. So given that we already have 5.3 billion, and we should expect a lot more to appear at this level on Monday, this level is going to be very, very strong. If we look back at SPY over time, this is just since the beginning of the year, we have 5 levels on here. And the largest of them is 11 billion. And that is at 391. That's this level right here that we just broke under. 400 is 10 billion, 8, 7, and 7. So we're sitting at 5.3 billion now. And when the signature prints come in, I expect this level to be on par with some of these other larger ones, perhaps even larger than this. And that's regardless of which way price breaks. There is just going to be an enormous amount traded here. I was surprised we saw that much during the regular session. I mean, technically it came after hours, but my point is this doesn't include any signature prints, which will come in on Monday, and they will be reported throughout the day, and they'll come in 250K blocks or 500K blocks, and who knows how many there are. But when it's all said and done and the day is over, we'll be able to know how important this level is going forward, and I think it's going to be very important. If we look at QQQ, we saw this level here. I've isolated all the trades that came in at the low, or at the close, excuse me, and you can see they started buying here when it first tapped the low, and now they really bought more towards the end, or I think it's bought. I should say they traded more, but because I can't know for sure. Well, we got that little after hours pop too, which is also unusual for QQQ, and if we zoom out, we can see this came in at a very important level. This was a level that held earlier in March. Same thing we saw in SQQQ level here. So this is the inverse of it. This is a level that held here in February. This was a level of resistance in January that ultimately was overcome, came back to test it, then launched. And if you guys recall, that number one trade in QQQ that was 5 million shares came in right about this time. Came in around 293. It's not shown on this chart, but came right before this big move up. So this level here is pretty darn important. So to review, unusual 5 QLDs coming in one after another at the bottom of a decline, followed by SPXL, followed by TECL, followed by UPRO, and then of course icing on the cake, or perhaps the most important trade I've seen in a long time, this SSO. So what do I expect? Typically, leveraged trades are used, are opened right before very sharp, fast moves, and they are closed at the end of those moves. They are not held for long periods of time. They are not held for days or weeks or months. They are held for, well, perhaps for days, but they're not held for long periods of time. So that would suggest a sharp move is imminent, that we should see a very fast a gap and go in either direction. I think it will be up, but there's always a possibility that it won't be. And again, magnitude is what my expectation is, and that is the primary takeaway here. But anyhow, these things are traded before and after very sharp moves. They're generally short, and they're generally very vicious rallies or vicious declines. So I think we should expect that to happen early in the week. Maybe perhaps Sunday evening when futures open, we'll see some evidence of this. But I don't think it'll be long. I know we have CPI Tuesday, but I think that this is positioning for something beforehand, and I have to assume it is related in some way to the banking problems that are happening. One other detail, I'm not seeing substantial size in the individual names, the Apple, Microsoft, Amazon, Tesla names, the major components, the mega caps, the major components of SPY and QQQ. And that suggests to me that this is a trade and not positioning. This isn't, in my opinion, preparing or accumulating for a longer term run. Certainly that could happen, but I'm not seeing that now. What I'm seeing is institutions setting up for a quick trade, a quick, very profitable trade. And if that's the case, and they aren't accumulating for a longer term run, we should expect that short term move to fail. Now, the timing is impossible to know. I don't think it'll fail. Assuming it goes up, I don't think it'll fail on Monday, or maybe on Tuesday with CPI. I don't know. Maybe it's impossible to know. Maybe a week, maybe a little bit longer. But But what I don't expect to happen is for this to be a long-term sustainable rally that lasts for weeks or months and takes us to some of the targets that we've all been hearing about, 4,300, 4,400, something like that. So, new information arrives all the time, and this thing could evolve in either direction rapidly. But this appears to me, or presents itself as a short-term expectation for a bullish move that they will then capitalize on, sell these after the move is over, when they've deemed they've taken it as far as they can, or hit some arbitrary target. Who knows what the specifics are, and then they'll cash out of these. That's my suspicion. So I'm going to be watching for large prints like this to arrive after the next move, and we'll see where we are, and we'll go from there. But this, to me, is it doesn't fit with the narrative, and I was surprised to see it, but it's hard for me to ignore. The data is telling a different story than what I'm seeing when I read the news and when I talk to people, and so I have to assume that there is knowledge of an event or a plan of some sort that is not made public yet, that we don't know about, that institutions are already positioning for, because they would not do this unless they knew something was going to happen, or they were preparing to make something happen, whatever it is. So that's it. If I'm wrong and this is bearish, I think it's going to be really, really, really bad. It is not my expectation, but like I mentioned earlier, it's magnitude that I'm looking for. If for whatever reason this plays out bearishly, and the data is anomalous in nature, and I am interpreting it incorrectly, which is entirely possible, then it's it's bad news bears for a little while, and yeah. So we'll just see. That's it, guys. Stay safe, and whatever you do, don't fight this move. It's going to break, and it's going to take everyone with it, whichever way it goes. So don't get cute and and short it if it's going straight up, and don't get cute and try and time a long entry if it's going straight down. This is the sort of thing that is going to be, in my opinion, relentless for a brief period until they've hit their target and moved on from it and closed these positions. All right. Thanks for listening. If you have questions, you know where to find me. Send me an email, send me a DM. If you like these videos and you find them useful, please subscribe, and feel free to share them. Thanks for listening. Talk to you soon. Bye.